Every healthcare practice owner wants to scale, but financial complexity is often the biggest barrier. But what if you could boost cash flow by 20% and cut costs by 15% in just 6 months? For many, this is a reality. This result comes from a shift, moving from reactive financial firefighting to proactive financial strategy. And this transformation does not require a full-time, 6-figure executive on your payroll. Here, we will break down the precise financial levers used to turn a struggling practice into a scalable enterprise. So, where does this transformation begin? It starts by fixing the financial leaks you might not even see. First, they stabilize cash flow by systematizing claims and actively managing accounts receivable for a predictable financial heartbeat. Next, they act as financial surgeons, cutting unnecessary operating expenses without affecting care quality, which immediately boosts your bottom line. Finally, they replace confusing spreadsheets with clear, reliable reports. Suddenly, you can see which services are profitable. The cumulative effect of these actions frees providers from administrative headaches. This allows them to focus on patients. Fixing leaks is one thing, but building a system that prevents them requires moving beyond basic reports to advanced metrics. A prime example is revenue leakage from denied claims. Most practices write off a percentage of these as a cost of doing business. A CFO sees a broken process. They quantify the exact financial impact of denials and build a systematic process to rework and resubmit them. This data-driven approach extends to staffing. A CFO analyzes patient volume to create flexible models, saving costs without compromising care. They also guide investment in technology like RCM software, choosing tools with a clear return to reduce errors and accelerate payments. With a stable financial engine, the focus shifts to building the future. But what is the biggest hidden threat that can wipe out all this progress? One key area of future building is optimizing your payer mix. A CFO builds data dashboards to analyze reimbursement rates and negotiate better contracts. They also identify opportunities for new income streams, like telehealth or ancillary services, making your practice more resilient. This is how a practice starts to truly scale. But what about that hidden threat we mentioned? Let's address it now. The silent killer for many practices is internal fraud and embezzlement. The median loss per case is a staggering $117,000. A CFO's job includes protecting revenue. They implement powerful internal controls, like purchase order authorizations, to make theft difficult. This protection extends to healthcare regulations. A CFO ensures compliance to avoid crippling fines that can halt growth in its tracks. But perhaps their most unique value is providing an objective, outside lens on your operations. Because they are not caught in day-to-day politics, they can see issues you're too close to notice, like a flaw in your reimbursement cycle. This objective viewpoint lets them offer counterintuitive solutions, challenging the way we've always done things with data. So you've stabilized finances, optimized operations, and managed risk. What's next? Turning your practice into a valuable, expandable asset. Think back to the clear financial reporting and strong internal controls we discussed. Those are the bedrock of a high practice valuation. Investors look for predictable revenue and operational efficiency. A CFO systematically builds these qualities, making your practice more attractive. When it's time to expand, their role evolves. The data gathered on staffing and payers becomes vital for evaluating deals and ensuring a merger's success. We've seen the progression, from plugging financial leaks and reducing provider burnout to building a data-driven operational machine. From there, the work moves to managing complex risks, and finally, to architecting strategic growth and maximizing enterprise value. This is what effective financial leadership accomplishes. Its function goes far beyond accounting, providing the strategic guidance for sustainable scaling. The question for practice owners isn't whether they can afford this leadership. It's whether they can afford to continue without it. If you are ready to move from reacting to your finances to strategically commanding them, it's time to see what CFO services can do for your practice. Stop managing a practice, start building an enterprise.